Hey, ladies and gentlemen, what's going on out there, fellow agents and mortgage associates, however we want to classify each other. My name is Mike Price, and I'm with Great Western Home Loans. I've been in the mortgage business for over 10, I think I'm going on 12 years now. I've been doing this deal for a while, and I'm shooting this video so agents out there can know how your loan officer should be able to help you sell clients on purchasing that home, especially those that are actually renting properties right now. So what I want to do for you guys is show you what I go through on a daily basis with first-time home buyers or people that are getting into larger homes and things of that nature, so I can show them the difference to actually educate them and help them make a excuse me, a more educated decision. I know now a lot of people out there, they talk to renters and the first thing they do is say, well, you need to buy a house so you can stop throwing away money. I'm not that guy. I mean, you're not throwing away money if you're renting a house. I mean, you got a roof over your head, so you're not throwing it away. You're providing yourself some security. Now, it may not be the best investment for your money, but what I want to do is teach people and show clients how it actually makes sense. And a lot of times people just don't know how easy it actually is to buy a home and how actually cheap that it would be. Now, what I've got here is basically an FHA loan right here. Um, and assuming that this loan is going to be 200, the purchase price of the house is going to be $200,000. You can see right here, I've got it highlighted, 200 grand. That loan amount is actually going to end up being about 193, but after you factor in the upfront MIP, it goes up to 195. Now, I just took this deal here, and I got an apartment that I found here in my local area in DeSoto to show people, hey, this is what you're paying in rent for your 2,000. I mean, for your rent here in Dallas. I mean, rents roughly on a two-bedroom home was about 1,000 square feet. I mean, I think that rent was 1430, and that's in one of the new apartments here in DeSoto. I think it's the town center area. So 1430 is what that rent is costing on that property. People don't realize, hey, you can get a $200,000 house and make a payment of $1,604. I mean, and this is with today's rate. Today is, what's today's date? The 21st of September. Rate's 3.875, which I'll go right here and show people. I mean, obviously the APR on an FHA is going to be a lot higher because you got the upfront MIP. Now, obviously there's some tax benefit to this deal too. I mean, you got $270 a month basic tax benefit. But I just like to show people, hey, this is what you're basically getting into. I mean, I'll go down here and I'll go through the rent versus principal paid. And this kind of opens people's eyes up a lot when they actually see this. All right, so basically what this deal is a 60-month analysis. Total rent payments in 60 months, if you're doing the typical 5% increase, and I took that information off an article that I found here in Dallas, 5% higher, that rent's going up basically 5% a year. So I'm not just making these numbers up. I mean, I've got some education behind this deal. In 5 years, if you continue to pay, you stay at the same place for 5 years, they continually increase your rent over 60 months. You would have spent $94,000 in actual rent payments. Now, the same 5 years on this particular FHA loan, you would have paid down $19,000 in principal. So now you've got 20 grand in equity sitting on that property instead of paying it in rent where it's actually not helping you financially or build your net worth. It's going to go over here and be paid in principal. At the same time, you've got a $15,000 tax benefit. At the end of the day, you've basically saved yourself $61,000 from purchasing a home. Now your value is increased, and I use an extremely modest increase on this deal. I think it's 3%. Now your home is worth $231,000, and you owe $176,000. So you've got equity of about $55,000. That is huge. So instead of losing $94,000, you've actually built yourself $55,000 in your nest egg. That's one deal that I show people, and their minds are completely blown. So basically, for what is this? The difference on this deal? $170 basically. They will have netted themselves $55,000 in total net worth. Now I also show them in a 15-year span as well. I mean, when people look at these numbers, I mean, it's just astronomical. In 15 years, you would have spent you'd be in an equity position of $186,000. Now, I'm assuming you guys can read this deal, so I'm not going to go here and highlight basically everything. But also look at this tax benefit, $44,000 that you would have saved in actual taxes because you're now a homeowner and you're no longer renting. You just made that you made that decision to actually buy instead of rent. And look at the position that you've put yourself in. I mean, obviously, when I go through here, I mean, we go and I show them basically everything, closing cost wise, everything that they're going to have to pay from purchasing a home. I mean, we're talking taxes, insurance, all this stuff is here. Now, a $2,000 home, property taxes, estimate about $450 a month, depending on the area that your clients are going to be in, is going to determine how much that number is actually going to be. Hazard insurance. Hazard insurance on a new home is going to run you about $70 a month for a $200,000 home. Mortgage insurance, FHA, they've cut it in half, makes it even easier for people to buy a home. It's only $134 a month. Depending on what position, they may not have to be in FHA. They can do a conventional loan. Now, these numbers are actually ran with a credit score of about 650. And that's an average number, and I'm still getting them a rate, an extremely aggressive rate, and the rate's actually giving them some money back towards their closing costs. People think that mortgage closing costs, hey, I've got to put down 20%. I've got to have this money to put down. Absolutely not. 3.5% you can be in an FHA loan. And I'm talking to you guys like I would talk to your clients. For 3.5%, you got an FHA loan, $7,000 down. Okay. Your closing cost, obviously, you would need for cash to close. This includes their down payment of 3.5%. With us, with the lender, with where I am today, with the credit score that I ran this at about a 650, I would be giving your clients $2,000 towards your closing costs, actually about $2,175. Now that number's not that important because that's going to change from time to time, depending on the rates, depending on the market, depending on a lot of different things. So that number is not so important because we can make it to where that number is $4,000. The thing is, with FHA, they've got to put down at least $7,000. I can make this loan close with them only bringing me $7,000 at closing. So if you're out there, you're in that market, or you've got some clients that are kind of on the fence. I mean, I know the millennials are huge in the new home buying area. They're buying houses left and right. They're entering the market. The baby boomers are kind of moving out. But the millennials really just don't have anybody to tell them or to help them make this decision on how easy it is to actually purchase a home. A lot of people out there just telling them, "Well, if you're renting, you're throwing money away." Well, that's about the stupidest thing that you can tell somebody. Obviously, they're looking at purchasing. They just don't know all the breakdowns, and a lot of agents really don't know or have a loan officer that can break this thing down to help them move clients from a lead that you may have pulled off the internet or off of Zillow or anything like that to someone who's actually pre-qualified and actually looking for a home. So I wanted to shoot this video just to show you guys exactly how easy it is to get someone from going from, hey, I'm thinking about buying, to actually helping them make an educated decision. So if you're an agent out there, you're watching this video, you're in Dallas, you're in Texas, give me a call. I can do this same thing for your clients. It takes about 20 minutes for me to put this thing together. And they get a personalized strategy specifically for them. And guess what? You get copied on it too. As an agent, I'm going to give it to you. You're going to know what's going on. You're not dealing with someone who can't be qualified. I just want to show you guys how easy it is to talk to your clients and have a lender on your side that's going to actually help you with your leads. I mean, we sell for a living. I sell all day long on the telephone. It's easy for me to talk to your clients and give them this information, whereas your job, which I think or how I perceive it, is actually finding them the home. You're not there to specifically help them get a loan and do all that information. I'm not there to help them find the house. I leave that to the agents. You guys go find them the house. I'll get them into the house. It's just that simple. But hey, once again, this is Mike Price. I'm with Great Western Home Loans. Give me a shout. Number's 972-818-3175. If your lender isn't doing this for you, you're probably dealing with the wrong lender. Talk to you soon. Take care.